Hello friends, welcome again to another video from Adventure Terrain Ventures. I'm Aurel David here, and today we are going to talk about market timing, and we are going to conclude our series on market timing today. And we're going to talk about how to identify market crashes. But before I do that, let me just give you an heads up on about how you can make payment for the courses that we offer here. So we have this, if you are a Paytm user, you can use this QR code to make payments. And if you are a PayZapp user, you can use this QR code. So let me just give you an example. If you are, for example, subscribing to or paying for Inflection Point 2, which is one of our courses, you need to use this QR code if you are a Paytm user. So if you recollect, in the last video, which we had done about 2 weeks ago, I had spoken about how to identify or how to find out if there is going to be a market crash. We also spoke about some warning signs that we could see in the market that a crash is imminent. And what we see in the last 2 weeks is nothing short of a crash, a market crash. You can see this is a monthly chart, right? So you can see 2 months we can really attribute this as a market crash. Today the Nifty has fallen by around 350 points, so which is very abnormal for this market. So I'll just move it over to a weekly chart so you can get a clearer view of this market crash. So coming back to the monthly chart, if you recollect, we had spoken about this rally, this base and a rally, and this being an area of demand. So market did bounce off from this area of demand and go up, but the up move was very short-lived. And then the market really fell, and it has breached this area of demand right now. So if you look at the monthly chart, the area of demand could be somewhere over here. So you can see this rally, this base and a rally, but it's not a very strong area of demand. A really good area of demand would be here, this drop, base and this rally. So this could be a really good area of demand. But the market is, the demand zone is somewhere around 7,800 and 8,200. So you may be asking me this question: will the market really come down or crash all the way till here? See, the answer to that question is unknown, and the ability to be able to answer that question does not depend upon how successful you are as a trader. On this daily chart, you can see the same monthly demand, and you can see that prices collapsed into this area of demand and bounced at least till here. So this area of demand has not gone unnoticed by the market. The market has definitely respected this area of demand, and the market has moved higher. And then for the second time, it did come down and then break this area or violate this area of demand. So definitely there were opportunities to go long and book some profits right here when the market rebounded. So coming back to what we were talking about, whether the market will come all the way till here. So you really don't need to be able to predict that. all we need to be able to do is, if the market comes down till there, you can be a buyer. But till then, you can even look for selling opportunities now, because with this kind of a crash, you would see a lot of supply zones being formed. So whenever you see a road bump, market would reverse upward and then again fall from an area of supply. So what is this speed bump or a road bump I'm talking about? See, if I go down to a weekly chart, you can see that here, let me just remove this demand zone for the time being. So what we see here is a drop, a base, and a rally. So this is another demand zone which is coming up. But since this is only there on a weekly time frame and not there on the monthly time frame, we can consider this to be a speed bump. Market could come till here, rebound, go up to some area of supply, which we have around right about here, and then it can come down and even break this area of demand. So you can use this speed bump even for buying if you're an aggressive trader, or you can wait for a rebound, a retracement to an area of supply, and then think of taking short positions. So friends, this is a slide from my last video where we spoke about the various warning signs that were looming around in the global international markets, where it signaled or it gave us warning signs. The market has given us enough warning signs to expect this kind of a crash. At the same time, we should not fear this kind of a market crash, but what we should do is look for areas of demand on the price chart and buy this market at areas of demand. To be a successful trader, the ability for a trader to time the market is very essential. So I can just show you how I timed the market today to buy Hindustan Unilever. Since we are at a monthly demand zone in the Nifty, it is an opportunity to buy. So what I did is I picked up a stock which is defensive like Hindustan Unilever and placed an order to buy that at 1,530. As you can see, the low that it made was 1,528.6. So I bought the stock at almost the low of the day. This is what is meant by timing the market. So you're trying to buy at a price where the market is just turning around. Now, if you are going to use an indicator or if you're going to use any kind of a trend following mechanism to enter this trade, you would have to wait for this point almost near my target to start buying, right? So when the trend following indicator gives a buy, I'm actually selling at that price. So this is a very good example of how we use demand and supply to time the market. So how did I time this particular buy? Let me just show you on a daily chart. So as you can see, this is my demand zone, which I had marked on a 15-minute chart, but I'm showing you on right now on a daily chart. Here we had a rally, a base, and a rally. So this is it is a demand zone. So this is a qualified demand zone, as what we will be covering in our course on how to qualify demand zones. to see whether they are qualifying to take a trade. So in the course, the stock market model street, when you join this, you will get in detail how to identify such zones and how to qualify them to see whether a trade can be taken. So we don't trade every demand zone. So as you see, there are so many other demand zones on this chart, but why didn't I trade those? Why did I pick this one? So it all depends on how I qualify the zone. So this is how I timed the market and we bought the low of the day. So coming back to the 15-minute chart. So we bought, not only did I buy at the low of the day, I almost sold the high of the day as well, right? So I did sell at the high of the day. So this is how we can learn to time the market. And the main thing in this kind of a trading is to make sure that you are going along with the smart money. The smart money meaning the institutions, that when institutions are buying, you are buying, and when the retail traders start buying, you are selling. So that's the whole goal of this game, right? And we will be going in depth about this whole methodology of trading in our course. So this concludes our topic on timing the market, and this is a very important topic, and I hope you guys have gained a lot from these videos. Do join me. We will be having some more videos coming up, and several other topics will be discussed. It was really nice talking to all of you. Thanks for joining the video. This is Aurel David here from Adventure Terrain Ventures. Do visit our website, adventureterrainventures.co.in, for more information. Thank you.